Just to give a little bit of a quick introduction, if some of you on the call have not met us before, my name is Catherine Jones, and I am EQK's Investment Relations Manager. And we also have our esteemed EQK President, Gus Van Dender, on the call with us too. He will be answering as many questions as we can throw at him. And today for a second time, we have a special guest joining us. His name is Jake Carpenter. He is an investment advisor, and he's pretty much an expert in alternative investments. So if anyone wants to ask him some questions, you're more than welcome to do that as well. He is not part of EQK. He has his own independent business, but he has been sending us some clients. And so we thought it would be a nice way for other people to get an idea of what the conversations are about. So that's why we've got him included today. So he's got lots of stuff that he's going to be sharing with us. So,
his ears were ringing.
There it is. There he is. All right. So that's Jake, everyone, if everyone wants to wave. All right. So just before we get started, what I kind of like to do on these is just to give you a little bit of a snapshot view of what it is that our offer is. So if you haven't had a chance, presumably you clicked on a link, you put in your email address, and then you were given a download link by email that would give you our information package. And so that would give you all of the details about the offer. So in short form, the offer is we are doing a roll-up, and our company name is EQK, or Equity and Knowledge, and we are a private equity holding company. We are doing a capital raise, and in that capital raise, we are offering promissory notes. We have 2 and 3 year terms. Our minimum investment is $50,000. If you invest $50,000 to $250,000 on a 2-year note, we will pay you interest on a monthly basis of 16%. If you do it on a 3-year note, we will pay you 18%. Now, if there's anyone out there that's interested in going in a higher level, after 250,000, that's Jake and his clients. After 250,000, we give you an extra bonus in there as well. So on a 2-year note, we'll give you 18%, and on a 3-year note, we will give you 20%. So pretty high returns. It's straight interest, and we do pay it out on the first of the month, and we do it by direct deposit. If you need to do wire or any other means, we can always have a look at that as well. All right. So that was the basics of it. So now we're going to get into the crunch time, and we're going to start asking some questions. So Gus, is there anything that you would like to add to the promissory note information, or would you be able to give us a little bit of a background of what types of businesses are you buying?
Yeah, we can start there. One thing I want to add, maybe when you speak about bonuses, right? It's not necessarily a bonus, and I want to, it is, but
Sure.
I want to explain maybe a little bit about why is there a difference between somebody putting in 50,000 and getting 16% for 2 years and then 20 for 250, right? I've gotten that question. Like, what?
Yeah.
Why is it different? Why would I get more if I give you more money for longer? Right?
Yeah, that's great. I get that question a lot, actually.
Yeah, right. So and if you know how this works, it may sound like a dumb question, but it's not. There's no such thing as a dumb question. The reason it's calculated that way is, if you think about it, right? Let's say I ingest $50,000 from somebody, right? You wire the money and it's sitting in my account.
Yep.
First of all, if that money is not deployed, it's just sitting in my bank account. It's not making any money, and
Okay.
I have to pay you back the interest that I promised.
Correct.
So for us on our side, right, and I want to be fully transparent and tell everybody here listening what's actually going on the back end, right? Because it may sound like this black hole. I'm throwing my money and magically money comes back, right? That's not the case. I wish it was. But so let's say I have $50,000 and it's sitting there,
Yeah.
and I don't have a company to buy. I still have to pay you, right? That's my promise to you. I have to pay you on the first of the next month.
Yeah.
So we're constantly in a position where, do we have enough deals? Do we have enough money? Not enough money? Too many deals? So there's this interesting dance going on between ingesting capital and spending that capital on cash producing assets.
Mhm.
So that is first part of the calculation. So 50,000 and I pay 16% versus 250 and I pay 20%. That's already a big difference just right there in that, call it quote unquote game of making sure that I can deploy that money fast enough to make those returns.
Right.
Now, the second piece to that is what I call the pressure on that capital. If I take $50,000 and I put it into an asset, that asset is now required to produce 16% for the next 2 years on that 50,000,
Yeah.
right? I don't know the math, but I don't remember the exact
150,000, that's
number. Six,
$666.
yeah. So every month I need to make sure that that company that I bought produces that money to pay you, the lender, back.
Right.
But there's also the principal. Not
Right.
only do I have to take the $600 out of cash flow, I also have to think, well, in 24 months, I need to pay back $50,000. So 50,000 divided by 24, that's another X
X amount.
amount that I have to put aside to make sure I can pay you 50,000 back at the end of the 2 years. Right? So now
Right.
you can see every tranche has that same pressure on the cash flow.
Right.
Now, if I have $250,000, obviously that allows me to buy or participate in an acquisition
Yeah.
in a bigger way than the 50,000,
Right.
right? So the 250, the math works on the differently on the 250 than it does on the 50,000, where with 250,000 I can buy more than with 50,
Right.
right? Now, another question we get is, well, if I give you 100 and then later I give you another 100 and then later I give you 50, do I get 20% on the full 250 that I gave you? Well, no, right? For the
Yeah.
exact reasons I just explained, because
Yeah.
each tranche has that same story around it, where one, I need to make sure I deploy it. Two, when I deploy it, it's now going to give me a very different return profile for that particular chunk.
Right.
Now, what we have done, what I can do is, hey, I only have 100. I want to make sure that this month I receive my 18% on it because I'm going to lock it in for 3 years. But
Yeah.
next month, I'm going to have 100, another 150 coming, and I'm committing to that. So now we have a bit of a timeline.
Right.
Am I open to looking at that and saying, okay, let's cut a deal, right?
Right.
Let me change that percentage for you and give you 20% on that first 100, knowing that 150 is coming. I'm not saying that that's the standard or the rule.
Yep.
What I'm saying is, if you want to have a conversation with us about that, let's have a conversation, right?
That's
And
great to
yeah,
know, because there's a lot of people that I've been talking to over this last little while that have real estate investments that they are, in the process of selling, and they're going to be, turning that money over. Ooh, and Jake has a comment. Jake is going to tell us a gem.
Yeah, so one of the things that I specialize in nationally here is capital gains deferral.
Hmm.
It isn't a problem to invest proceeds from the sale of a real estate investment asset into EQK, but you just have to work with someone like me if you want to do it tax deferred.
Right, right.
So, and that, what Gus just said is powerful when it comes from a planning perspective for me, Because a lot of times what I'm doing is I'm not only introducing investors to investment opportunities, but I also help them to find the funding for
Right.
those investment opportunities. And that's where, again, you can sell your real estate, pay the capital gains tax, and invest with EQK. But my question to you is, why pay the capital gains tax if you may not have to? And
Absolutely.
that's where someone like me comes in.
Right.
But anyway, Gus is very, EQK is a great company to work with. I've enjoyed it immensely over the last, what has it been, 6 months or 3 months or so. We have driven our relationship quite deep in a short period of time. But anyway, great comment, Gus.
Thank you.
Yeah. Okay. So I don't know if anyone's started asking any questions. By the way, just a caveat, if anyone wants to ask any questions, please don't use the chat feature. You want to use the one that says Q&A at the bottom of your screen. When you click on that, the questions will go into a chat-like feature, but everyone can see them. So that's great. So if you can add your questions there, that'll be awesome. Okay, so if let's say I'm your person that's interested in investing, and I know that I've got 100,000 right now. I want to invest, but I also have a property that I'm selling, and I'm going to sell it in July. That's when I'm thinking that I should have everything wrapped up. What if I don't sell it though? What if for some reason it takes another couple of months or whatever? Are you still open to those deals? Like, what do you need to prove that these people are going to give the cash, right? Or that I'm going to give the cash, right?
Well,
If you're
when
making
you're
a
talking,
specialist.
yeah, when
Yeah.
you're talking about adding multiple tranches,
Yes, please. Yeah.
yeah, I mean, if it's not sure that the money's coming, then I mean, it's going to be a conversation to have and look at all the parameters on a
Perfect.
one-to-one basis, right? I mean,
Okay.
if you're still in the process of listing your property, and that's different than, oh no, the deal is signed, or it's in escrow, whatever, the money's coming in 2 weeks, right?
Gotcha.
That
Okay.
So we would have to look at how that works, because all I want to know is what 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 is it that you can commit to in order for me then to change my commitment to you, right?
Right.
That's really what we're looking at. And all I want is, I want to give everybody 20%, but I also don't want to overpromise and then get into a position where I'm like, oh, sorry, I
Yeah.
overpromised and now we're all in trouble. Like,
Right.
what's the point, right?
Yeah.
I think the interest that we're paying is already very generous. And
Yes.
and I'm not saying that we're doing that because we're nice people and we want to be generous. Yes, that's true, but how it's also, we're buying assets that produce money, and I'm more than happy to share
Yeah.
because everybody wins.
So that's a great place. Could you talk a little bit about those assets that you're buying? So what do these companies look like
Yeah,
so that you can technically afford to give this kind of return?
yeah, absolutely. Yeah, it wouldn't make sense to give 20% if you're thinking traditionally companies produce, 10% profit margin, right? How does that make sense?
Yeah.
Well, we're not going to buy companies that only produce 10% profit margin. Um, Not in this roll up. The companies that we're looking at hover around 50, 60, 70% profit margin.
Right.
And that may seem like impossible for a lot of people listening, but they exist, and mainly in the online space, right?
Right.
Think about, selling, a tangible product, right? That there's a production cost, there's a material cost, there's shipping, there's employees, there's so much overhead. You'll be lucky to make 10% on this product, right?
Mhm.
Uh, After all the expenses are paid. Well, when you have an online business, you can create something once and sell it 1,000, 1,000,000 times.
Right.
And the difference between selling it 1,000 times versus 1,000,000 times is minimal. Because if I create a product, I record a video, and I sell that video for $10, right? I have the cost of making that video. I have the cost of software to host that video, and I have a cost of marketing to bring people to buy that video for $10. Now, once that infrastructure is built, I have the video is done, the website is set up, the video is hosted, and I have created a funnel, meaning a page, right, where you can come and put your credit card in and you pay me $10. Once that is built, what's my expense? Nothing. I'm done. The only expense is now lead generation to drive people to that page interested in that topic and giving me $10 to buy that video.
Yeah.
That's what we're doing, right?
Yeah.
Now, the overhead on that company is almost nothing. And that's why we can generate very, very high profit margins, up to 70%. Marketing is typically 30%, right? That's usually what you spend on marketing, 30% of your revenue. Well, that's all we have, right?
Yeah.
Now, on top of that, we are also consolidating the distribution of these products. What I mean by that is when I have a product and I've worked on selling this for a long, long time, I will probably have a list of email addresses of buyers and non-buyers. When I run a Facebook campaign, like for example, our campaign here, right? Most people here came to us through a Facebook campaign.
Yeah.
Well, how many people do you think that put their email address in to download the guide actually book a call? Well, a small percentage. How many of the people that book a call actually invest? Again, a small percentage. But we have all those email addresses.
Correct.
What prevents me to take that email list and now send an email saying, hey, you weren't interested in EQK. I get it, not for everybody. However, I have this really cool thing that I think you may be interested in. Maybe you should become a client of Jake's, right? Because you're obviously an accredited investor. You must have some money stashed away, and maybe there's something we should do or look at to save you some taxes. So what prevents me from now sending an email to that list and offering those services? Nothing, right? Now, the bigger that list, the cheaper that distribution becomes. And now I can cut that 30% in half as well, because I buy more lists. I buy Catherine's video that she sells for $10. I buy Jake's video that he sells for $20. I continue to sell that video, but now I have your list, I have Jake's list, I have my list. I combine them. Next thing you know, we have 10 million emails. And that's actually a real number. We're there.
I know it is.
and that doesn't even include, I don't know if I mentioned this last week, we actually finally got a grasp of the free ebooks database, and there's 9.3 million emails in there.
9.3 million. And that's just that one company that you've got.
Yeah.
Right? Yeah. Wow.
That's the free ebooks website, right? We knew there was 2 million active emails in there, meaning there's campaigns going out and those are active emails. However, there's a total of 9.3 million in the database that we have ways to revive, right? We can slowly start sending emails to those people unless they have unsubscribed, but I don't think they would still be there. But yeah, we're kind of getting a feel of what's in there, and it's a gold mine, right? Just think about making one. Not only that, there's another piece. Let's say you make $1 per person, right? Over time, that's another $9 million in revenue that we didn't have.
Yeah.
And then also, guess what that is worth. I know fintech companies that would pay me $20 to $40 per email address.
Right. For you to send out an ad on their behalf.
No, to buy that
To
email.
buy the, oh, okay. Okay. But where you are getting a lot of the real revenue that comes in from these businesses is
Promotions.
the promotions, the cross promotions to each
Mhm.
other, right? Can
Yep.
you explain a little bit more? So that in a sense, that cross promotion is called affiliate marketing. And I know that there's a lot of people on the call that probably don't know what affiliate marketing is.
Yeah.
So can you give us a little bit of an explanation about that?
Yeah, of course. Yeah, I kind of touched on it, explaining, if I buy your product and Jake's product, and then we have a combined list, right?
Yeah.
Because what affiliate marketing is, hey, I have an audience. Well, we all know influencers, right? On Instagram and TikTok and whatever.
Yep.
Probably everybody knows the Kardashians,
Fair.
and it's a good example.
Yep.
What do the Kardashians actually produce as far as product or service? Zero. When they have
Yeah.
their own product lines now, but when they
Yeah.
started, what did they produce? Nothing.
Right.
They had an audience. They had a captive audience. And when they were flaunting a handbag and they
Yeah.
said, "Oh, this is what I bought. Look at me, look at me." Everybody wanted to buy that handbag. And guess what they did? They made a big commission on every single sale of that handbag.
Right.
That is affiliate marketing, right?
Yeah.
Affiliate marketing is me selling a product or a service that is not mine, but
Yeah.
because I have an audience that I know is interested in that product, I'm going to sell it to that audience and I'm going to take a commission on the sale.
Right.
So that's what affiliate marketing is. And in the info space, this is something that is already happening. It's nothing new. We didn't invent this or trying to do something that hasn't happened before. Because if you're interested in online education, it's very likely that you are interested in a multitude of concepts and ideas and training and knowledge and expertise, right? If I buy a course to learn how to flip houses, I may also want to buy a course on what do I do with the money afterwards? What do I do with the profits? Where do I put them? Where do I invest them?
Yeah.
Right. So if Catherine is selling a course on wholesaling and Jake is selling a course on how to do that in a smart way, tax-friendly way, well,
Yeah.
I'm going to buy both.
Mm-hmm.
And when Catherine presents Jake's offer to her list, she's going to make a commission on Jake's course and vice versa, because Jake has a course on how to manage income from selling properties, and you have a course on how to do wholesaling. Of
Yeah.
course, his audience is interested in that. So
Yeah.
cross promotion is going to happen, and it does, right? Because it only makes sense.
Right.
So again, that's an additional layer. Not only are we buying companies that are already profitable, by consolidating them and building a larger list, we can now do that cross promotion and keep 100% of all the revenue.
Right. Right. And so the companies that you currently have that are in the holding company, there's 4 companies in total. All of these have that cross promotional potential, correct? Yeah. Okay. All right. Well, that is super helpful because a lot of people that we've been getting on the calls with, they haven't necessarily known about affiliate marketing, or they had a vague idea. I have had a couple of conversations with people actually this week about them buying those courses, and exactly what you said. Usually most people that I've spoken to have really gone through the real estate side, right? But now that real estate, some people are like, the interest rates are rising, right? People are trying to look at some different alternative type investments, which is why I think that they're arriving on our doorstep, right? Because we're getting some fairly good returns here. So from that perspective, just from a tax perspective, a lot of people have been asking about, this is straight interest. What are some of the types of things that people could potentially talk to their CPA about for reducing some of the income levels that they're getting from this? Can they invest through their LLC? Is that a possibility? I'll direct that to Jake, actually.
Yeah, so there, you can invest through your trust, your LLC, you can invest personally, however you want. I'm again going to give my disclaimer. I will not be giving any investment, tax, or legal advice. So the answer to that question, Catherine, is yes, maybe you can
Yeah.
reduce. It
Yeah.
just depends on how you set it up. Um, you know, I defer to the CPA, your tax professional on that. The
Perfect.
only difference is a guy like me would work with my client and their CPA to have that conversation.
Great.
I would initiate the meeting or be in the meeting with the CPA to discuss those options. But yes, it's for the most part, it's interest. So, and I always say the good news is it's it's a lot of income. The bad news is it's a lot of income. So overall,
Right.
overall it's good news. But if I do my job for my investors, for the people I work with, if you do a good job in investing, you're going to create some additional taxes for the most part. And
Yeah.
that's not always a bad thing, even though some of us like to think it is.
Right, right. And so that's really helpful to know that, there's people out there like you that can actually help guide some of those conversations with the CPA. Because if I'm somebody that's brand spanking new, like there's quite a few people that I've spoken to. They're getting into their retirement years. They've been lucky that, their houses have accumulated. They've got their IRAs that have built up over time period, but they haven't been really strong investors, right? But they actually have the wealth that they can now get into some of these deals because they are technically accredited at this point. But they don't necessarily know where to go, and they don't know what types of questions to even ask. So
You're right. You don't know what you don't know sometimes. And
yeah,
I call it managing tax flow to maximize cash flow. And
right.
it's a conversation that I
That's a
have
great
to
way to
lead
put it.
people through because you don't know what you don't know. And you've been doing stocks, bonds, and mutual funds forever. It's comfortable for you. It's wildly risky, especially after you get to retirement age. But
Mhm.
always realize that private equity is actually a pretty good thing to potentially consider, EQK being a private equity play, for creating above average returns and not necessarily creating a ton more risk. We eliminate or reduce risk by creating diversity. Okay.
Right.
So if you're all in stocks, bonds, and mutual funds, you know that recently with the interest rate increase, inflationary increase, gas prices going up, on and on and on, we've seen an unprecedented issue within stocks, bonds, and mutual funds in that instead of stocks coming up and bonds going down and bonds coming up and stocks going down, we actually have seen them both decrease.
Mhm.
That's correlation. We do not want correlation upon the different assets that we diversify into. And that's one of the things I think EQK can help people create is additional diversity that is not necessarily correlated with your stocks and bonds in a private equity position.
That's a great point. So this EQK, because it's a private equity firm, there are private equity holding company. This is considered an alternative type investment, correct? Right.
That's
Okay.
correct.
Right.
Yep.
Whereas the
Jake,
stocks,
yeah,
sorry?
sorry to interrupt, Catherine, but I wanna riff on that a little bit, Jake,
Yeah.
because a question that I always get, or a comment or a concern, right? And I understand it. Don't get me wrong. Yeah, but Gus, that that is so risky. I don't know who you are. I don't know what you're gonna do with my money. You're
Mhm.
gonna invest in a company. I mean, that is so much more risk than investing in a property. And then I just chuckle, right? I'm like, you have no idea, but I'm not gonna try to convince you otherwise, right? Because it's such a thing that is ingrained in people's minds. Oh, buy a property. That's the safest thing you can do with your money. And I get it. I understand it. It's real property, right? There's real collateral. There's bricks and there's glass and you can see, you can touch it, right? Where, well, I'm gonna give you 100,000 of my hard-earned money, and you're just gonna waste it. I'm not gonna see it, and there's no collateral against it. So, and I'm sure you get that question all the time with your clients.
Mm,
What do you say? Like, I just want to hear it from, I want people to hear it from somebody else. Because of
yeah.
course I'm biased. I'm like, what are you talking about? Of course I'm gonna take care of your money. Like, it's me, right? But
Yeah.
I get it. It's weird because
Yeah, yeah.
it is me, right? At the
And
same time.
that's very real, a very real question that I get all the time,
Yeah.
especially within the community of pre and post retirees. Get a lot of folks that come to me and here's what I've got, and they've got $2 or $3 million in 401ks, 403bs, SEP simples, cash they've set aside and all this other kind of stuff. And when they ask me that question, I go, well, let me ask you a follow-up question. Do you know the people that you're giving your money to now? Do you know who's running these companies? The answer is always no. You don't even know where the money goes. All you know is the Dow is up, the Dow is down.
And what does that even mean,
S&P
right?
is down. Maybe I did good, maybe I did bad. We don't even know as advisors what is pushing this market up, people. There's no reason why it should be up. So if you're out there heavily positioned in the stocks, bonds, and mutual funds, and you're getting close to retirement, unless you can weather a 40% loss and potentially take 10 to 12 years to make it back to where you are, I would strongly consider diversifying some in an alternative asset that's not correlated with stocks, bonds, and mutual funds. Because number one, who are you investing your money with?
Mhm.
Do you know the owners of the companies? No, you're in an index fund that, a billionaire can get on the news, on the news tonight and make a statement that can tank one of the indices or the Dow. Or I mean, there's a lot of stuff going on here. And so the cool thing about Gus is you actually can find out a little bit of information about him. You actually do know who your money is invested with. I did a lot of due diligence,
Mhm.
and yes, real estate, while it could be a great place for you to diversify in a private equity play, that may be okay. But unless you're an expert in dealing with trash, toilets, tenants, liability, and management, you may want to consider doing something else with your hard-earned money, because it's not as easy as it looks unless you're a contractor, a builder, you've got some kind of background in working with tenants, contracts, real estate. It's not that simple. So that's why I like to personally invest in real estate that's professionally managed through a private equity type of position, just like I don't want to be the expert with things like rolling up companies like what Gus is doing, but I know Gus knows how to do that.
Mhm.
And I don't want to learn how to do that. Just like I don't want to learn how to manage real estate. I'm invested in real estate, but I don't want to learn how to do the management, the trash, the toilets, and the tenants. Now there's different things that comes with acquiring businesses, but if you know and you're good at what you're doing, that's what you need to do. Is you need to find private equity partners, people that you know, like, and trust. And that's why you're here on this call, is to get to know Gus, to
Yeah.
get to know Catherine, to have your questions answered by someone like me who has been doing this for over 17 years, and figure out what kind of comfort level you have. I tell people, maybe if you're an accredited investor, which you should be if you're on this call, that means you've got over $1 million net worth. Would it be totally crazy for you to put $100,000 in a private equity play like EQK? No, it's 10%.
Mhm.
Maybe you don't want to put 80% in EQK, right? But to diversify 10% of your portfolio, or to consider 10 to 20% of your portfolio, statistically speaking, the ultra wealthy are ultra wealthy because they keep 25 to 50% of their invested capital in private equity positions. They invest 25 to 50% in alternatives at least.
Mhm.
So
That,
all we're talking about is you taking advantage of considering investing the way the ultra wealthy do. Why do they invest in private equity? Because it's not correlated to the stock, bond, and mutual fund market. It's
yeah.
uncorrelated.
Last week, for those of you that are on the call that weren't with us last week, Jake was with us for the first time last week, and he actually gave us a book recommendation, which is Tony Robbins' The Holy Grail of Investing, which I am only partway through because there's only been a week. So, but there's a lot of conversation about that, about the alternative investments, where a lot of these, people that are ultra wealthy, they were able to weather the storms just because of alternative investments, right? So they weren't hit by that crazy decrease, right, in the stock and bonds market, right? Which is from what I've read about in this book, is the first time in the last 100 years where they've actually had that correlation, then they've had that drop. So
I'm going to come kind of behind you on that comment, because
yeah,
here's what happens when we have a tumultuous economy, kind of like we're in right now. A
yeah,
lot of people like to stay in cash, right?
yeah,
They have a lot of dry powder, and they meet guys like Gus that have a really good opportunity, whether it's a good economy, a bad economy. People, in fact, COVID, and I'm sure Gus can attest to this, COVID's probably helped the equity and knowledge business roll up, because we got people at home that are realizing that the best investment there is the investment in developing yourself. It's investing in you.
yep,
Oh, it
It's the
was a
kind
huge
of
boost.
thing.
It
It's
was a
the kind
huge
of
boost
things
in
that,
the industry.
yeah,
yes, the kind of things that these companies that he's rolling up and purchasing, that they sell. It's Tony Robbins' program, and at some point, Gus, I'm going to have you hook me up with some kind of a contract with Tony Robbins, because I recommend
I
his
was
book all the time.
I was in his office on Monday,
Yep,
actually.
there you go. And if you don't
Yeah.
know
there,
who Tony Robbins is, Google him, because you should know.
Hmm.
So we have a time where people are out of the stocks, bonds, and mutual funds because they don't know what's going on. Interest rates are up, gas prices are up, inflation's up, things are going crazy. Then they meet someone like Gus and they realize, hey, um, this is actually going to do better with all this craziness going on. And what we find out is alternatives, for the most part, as long as you're paying attention and working with somebody, that it does well in a downtime, and
mhm,
sometimes even better through times like COVID, and even better when the stock markets is up and down and sideways, back and forth. And
Yeah.
so that's the message that I try to get out is, hey, yes, okay, I can invest people in stocks, bonds, and mutual funds, but that's not where I want all my money,
mhm,
right? I want to be where there's opportunity. In the book, The Holy Grail of Investing, while some of it doesn't always relate to all of us because
yeah,
it's to different wealth levels,
yeah,
but it had this first couple of chapters are really great because it talks about diversity into private equity, which is powerful. Why? Because look what Gus is doing. The private equity plays, they don't pay 3, 4, 5, 6%.
yeah,
They pay 10, 15, 16, 18%.
yeah,
And they pay it monthly.
yeah.
So it's just, is it where you put all your money? No, but it is potentially a good diversification tool.
Yeah. Yeah, that's also a great point too. For a lot of the people that are in the retirement space, they still need the cash flow. So you're not having your money held up for 2 to 3 years before you get your payment back. You actually are in cash flow now, which makes you much more viable if you need something at the bank, or, you know, like if you want to prove that you've got some money flowing in, you've got that income coming in on a monthly basis, which is also really great.
Yeah. This also leads to another question that I get all the time is like, well, why are you giving me 20%? Like
Mhm.
what 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 is driving us to be so generous in splitting this? Well,
Yeah.
because for us, we want to make this a no-brainer offer. Why?
Mhm.
In our space, when you're first to the party, first to the table, you get the best food, right? And
Right.
we have discovered a niche that nobody else has seen yet or has caught on yet.
Yeah.
Why? Because it's almost it's alternative in the alternative world, right?
Right.
Because when you think who would pay money for an email list, who would pay money for a video that Catherine made?
Mhm.
Well, if you don't understand the industry, nobody would, right? If
Yeah.
you don't see how the consolidation of these things and how affiliate marketing works and how this affiliate marketing industry works, where the top affiliate marketer, you know, again, gets the best deals from everybody and other affiliates, and there's this whole ecosystem that is very foreign to most people. I've worked in that industry for 8 years, not as a private equity guy, but as a participant, a consultant. I had my own coaching programs. I know that space, right?
Yeah.
Um, so that's why we are willing to be so generous, because this is a long-term play for us.
Yeah.
Giving away 20% right now for the next 2 years, that's tough to see that money go away, right? Because I'm like, that's really my money, right? I'm working to make that money and I'm giving
Yeah.
it back to the investors. But at the same time, I couldn't buy this many companies this quick without your funds.
Right.
So
That's
it's a win-win, right? So
that's not it's not uncommon to see that. There's a lot of opportunities that are forthcoming with how quickly they need to move on things. So in
yeah.
the private equity space, it's very normal.
Oh yeah, I'm actually okay with losing money on these deals, right? What if, let's say I fully fund an acquisition and it's all with 3-year notes above 250 and I owe 20% a month,
Yeah.
but my profit margin is only 18. So I need to pay 2% out of my pocket.
Yeah.
Okay, so what? I'm okay with that because in 3 years now that company is mine.
Right.
And I'm not in the business of running a company to pay my bills or to buy diapers for my baby, right? I don't have
Right.
a baby anymore, but that's not the business that I'm in. I'm in the business of acquiring businesses.
Yeah.
So if I have to break even or even lose a little bit of money for the next 2 to 3 years on a deal, that's okay. Because
Right.
that's my business, right? It's
And you
different
have,
when I have a coffee shop and I have minus 10,000 on the P&L this month. I'm like, okay, so how am I going to eat? Right.
yeah. Yeah.
So,
So
and that's not what we do,
you're
right?
operating at a much higher level than the average small business, right? Because you're doing,
Well, it is not a small business, right?
yeah.
That's the point. We're not running the business
Yeah.
for profit. I don't have one business that I rely on that has to do well to 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 make money and to pay my bills or to
Right.
pay my staff, or that's not our business. We're in the business of acquiring businesses.
Yeah. And
So
so can
that's
we,
important. That's important to understand, I think, right?
yeah, and can we just kind of touch a tiny bit? I know that this conversation has gone really fast today. So just a little bit on, so EQK Holding Company was created in January specifically for this roll up. And the company that's behind this, or the parent company, is Toolbox. Toolbox already has close to 100 companies in there as well, correct?
Mhm. Yep.
And so those companies, you guys are managing all of those companies as well as the EQK holding companies that are going to be coming in. And so how does so if for some reason, let's say somebody's, really nervous, they don't understand the space or whatever, and they know that their note is convertible, which I don't know if I mentioned that earlier. The note is convertible to equity in the assets should you default. But as I've heard you say many times, that's not going to happen because you don't want to give away equity, which we get a lot of questions about people asking for equity. But the reason for that is because you've got this parent company that can also help with the supporting of the EQK holding company too. Is that correct?
Of course. Yeah.
Yeah.
Yeah. Yeah. And that goes back to what I was saying earlier, right? Even if I break even or lose a little bit of money in the EQK holding, which is not going to happen. Again, worst case scenario, if it does, then yeah, there's other companies that can support these notes and the interest on these notes,
Right.
right? And if you look at Toolbox as a whole, and I think a lot of people will understand this when I say, look at Amazon. How long did it take Amazon to actually make a profit?
Mm,
It's very
I don't know
recent.
the answer.
For
Yeah. Okay.
years and years, and big corporations like that, they operate that way. They
Right.
lose millions of dollars every year after year after millions. Where do they get their money from? Investors, equity partners, going public, selling shares, right?
Yeah.
You may be looking at the shares and like, oh, cool, my shares are worth $100,000. Well, do you know the company that you own a piece of is actually losing 500 million a year?
Right.
It
Right.
it doesn't make sense if you look at it again from a small business owner perspective, right? I have a
Right.
coffee shop, I have expenses, I make money, I have a profit. If I were to run minus 10,000 for a year, what? How does that work, right?
Yeah.
How do I live? How do I pay my bills? It doesn't work. But at the corporate level, that's just a game that is played all the time,
Yeah.
right? And investors put money in thinking about the long-term benefits, and one day that company is going to be profitable and be worth $1 trillion. And then I don't know, I'm going to sell my shares or what. It's different. It's a different game, right? And I'm not saying that we are at that level, but it's similar, right? I
Right.
have lots of companies that lose money. I have startups that I pour money into every single month because we're not even ready to launch, right?
Right.
I have a whole dev team that is building apps.
Yeah.
Well, until those apps launch and generate revenue, that's a loss every month.
Yeah.
But that's okay, right? Because again, we have a portfolio of companies and we have
Yeah.
investors and we have shareholders, and it's a different kind of game.
Right. 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 We have technically only 8 minutes left in here.
Mm.
I don't see any questions so far today. So we've got some pretty quiet people on this webinar today, which is great.
Or
But if you
we
do,
just answered everything, you know?
maybe we're so good. If you do have any questions, definitely feel free to put them in the Q&A. If not, if you're, a little bit more reluctant to do it in a public forum, you're more than welcome to have conversations with us. You can book a 15-minute call with me. I can answer a good share of the questions. Any of the questions that I can't answer, I will always defer to Gus. And currently, in the last week, I've been deferring to Jake a few times. So we've got a couple of clients that have reached out to you in order to help them kind of get themselves sorted as a third party independent. Jake does not work for EQK, just FYI. But he's definitely offered this to clients just because he's really enthusiastic about it, which is fantastic. All right, so
How many of your clients have you referred to us now, Jake?
We probably have 3 or 4 or 5 already.
Yeah.
yep,
As a diversity tool, it's great. So and the return is so great. Like you said, it's a no-brainer. And the thing I would probably want to leave with whoever's on this call, or whoever watches this later on, is you need to understand that there are tax efficient ways of investing into opportunities like EQK. What
Mhm.
that means is you can invest cash, you can invest your 401k, IRA, SEP IRAs, simple IRAs, Roth IRAs. You can invest the sales proceeds of any highly appreciated asset, depending on your circumstance, all penalty-free, tax-free. If you work with a professional, and again, depending on your specific situation. So you don't necessarily have to sell an asset, pay a big tax to invest. If you have any questions, I've told Gus and Catherine, please feel free to refer whoever to me. I'd be happy to have a free consultation with you to show you how to do that. I do that every day. Again, finding the opportunity is one thing. Knowing where to find the funding for that opportunity is another thing. That's one of the areas I specialize in. So if you're thinking, well, this is great, but I got a 401k at work. I'm still working there. I can't do anything with it. Well, if you're 59 and a half, chances are your current 401k administrator will allow a non-hardship in-service withdrawal of some or all of your current 401k balance.
Mm.
You can put that into a self-directed IRA. I can hold your hand every step of the way to do that and diversify a portion into EQK.
Right.
You've got to know, you've got to work with someone that knows what they're doing so that it is a penalty-free, tax-free transfer where you can hold an asset inside of your IRA and access an opportunity like EQK.
That's some great information. I've got a question in here, and I know we've only got a few minutes left, but Ricky just asked, if I contribute my IRA of 100K with 200K cash, would that count towards the 20%? Can you do that as a combined effort?
Yeah, just like I said earlier, right? It depends on is that an idea that we're going to work on, and maybe one day 6 months from now I will be able to put the extra 100 in, or no, that this is just something that I need a little bit more time. I can put 250 in today, and probably in a week or 2 weeks an extra 100 will come. Then yes, absolutely. I just want to say that we need to look at it on a one-to-one basis and look at the specific timeline where this is going to happen. If it's, hey, I have a property and I haven't even listed it yet, maybe one day I'm going to sell it and I'm going to add it, then I don't, then we don't know when that extra chunk is going to come.
Right.
But if there's a plan and a timeline and we know, how long that's going to take, then absolutely, yes, we're open to making this a win-win for everybody, right?
Right.
So yeah,
yes.
speaking to the IRA position, if it currently is in an individual retirement account, you're going to want to use a self-directed IRA to move it from the traditional IRA into a self-directed, and then you can purchase the EQK asset to invest.
Right.
Again, if you need help with that, Catherine can hook you up with me to walk you through that process. But we could quickly and easily put 200,000 of cash in, and within a few weeks have that IRA transferred into a self-directed and then wired over to EQK. So
Right.
we could probably sway Gus into giving us a deal on that. So.
Well, because I have already, right? Jake,
Nice.
with
Gus
one
is
of
a
your
great guy.
clients. So yeah.
It's been a joy to work with him.
So, so that brings up a really good point about the self-directed IRA. One of the things that people have to do is that they have to talk to their custodian just to make sure that they actually do have in fact, a self-directed IRA. And if they do, then chances are EQK is not going to be listed on that, but we can do up the paperwork in order to make sure that that can happen. So that's not a problem as well. So just wanted to point that out. All right, we have 2 minutes left. Is there anything that we think that we wanted to cover that we haven't so far? Or do we think that we've pretty much covered a lot of the basics? Oh, actually, can we leave on one point? So this is one of my first questions that I ever posed to Gus when I first got working with him is, what makes him so different? Why can he make these companies work? What is it that he has, that he possesses, that is able to make these companies really grow and flourish? And so he gave me a really interesting answer, which we kind of boiled down to: he's very good at that macro level, looking at companies, but he's also an implementer and can get into the weeds. So could you tell us, I always use this as an example, but could you tell us about how you got into this space in the first place with Wake Up Warrior?
Yeah, absolutely. Yeah, it's a fun story to tell because
Yeah.
the numbers are just ridiculous, and I
Yeah.
still don't know how we pulled it off. But um, I guess to add to what you're saying, right? I have a very unique perspective on companies, because a lot of people look at it as a almost a dry analytical numbers thing, right? Where
Mhm.
I'm like, no, a company is people. You're dealing with people. A group of people are doing something, delivering something else to another group of people, and there's a value exchange,
Yeah.
right? We pay for something. So when that is forgotten, right, it makes it very difficult to keep that company running. Because
Mhm.
at the core, how we started was, I give you a loaf of bread, you give me some goat milk, right? That's what companies were when this all started. And so I never omit that idea that, hey, we're delivering a service, a product to people, right? People giving something to people and then giving them money in exchange. So I've always been very focused in everything that I've done on the human experience around that, not just for the employees in the company, but also for the customers,
Yeah.
right? That's always my primary goal, is to make this a delightful experience for everybody involved, and truly uh, create that value exchange. So I was actually a client of a coaching program called Wake Up Warrior for a while, and got really, close to the owner, and he knew what I had done in the past, or what I was still working on as a business consultant at the time. He's like, well, can you help me grow this company? I wanna impact more families. I want to impact more men. And I was like, wait a second, this is actually really cool, because if I can help a coach grow his audience and the people that work with him or her, I'm actually doing something super impactful. Because now again, more money equals more people helped. It's not just more widgets sold, right? So it completely matched with my values. To keep a long story short, I said, yes, let me help you. He had this goal, 5,000 people this year. He had 300 at the time, and he
Yeah.
wanted 5,000 in 1 year, which seemed impossible. We got to 6,000 people by September of that year.
Yeah.
And we took the company from 3 million to 60 million in 1 year. Why? Because we created an experience that was unseen in the industry. Nobody had ever seen that before. And to be frank, a lot of coaching programs afterwards mimicked the stuff that we did,
Right.
because we created something unique that was focused on the experience that a student would have, with gamification, and I mean, it was insane. It was so much fun, but it gave me a really good insight in that space, in that industry. And yeah, that was my my big entry into that space.
Right. Sorry, we just have, oh, we're 2 minutes over, but Ricky just asked, after the 250K is invested, I want to continue to contribute more funds. Is it looked at as a different note, or can it be included in the 250K and reset the time frame?
Well, it's the same answer as
Same
before.
answer.
If
Yeah.
I know what the timeline is and it's soon, then yes. If not, then we have to consider it a different note and a different chunk of money.
Yeah.
And I know, let me check. Ricky, I in the beginning of this call, I don't know what if you were here, but I kind of explained why it's difficult to do that because of the timing and what we're using those funds for, and then also the pressure on each chunk of money, right? So if you and I talk about a timeline and you're like, okay, this is going to come then and this is going to come then, and then I'm going to wire this number and that all adds up to 250, of course I want to work with you and create something that is a win-win. If it's 3 months later I have another 50, can we add that? No, we can't, because now I'm putting way too much pressure on that 50, and
Mhm.
I'm going to get into a position where I may not be able to pay you, and I don't want that, right? I don't want to get to a place where um it's impossible to fulfill on my commitment to you, right?
Yeah.
As much as I would love to give you 20% on everything, but there's just a whole calculation behind um the the percentages that we're giving based on the amounts that you are investing.
He just mentioned that he only got here about 15 minutes ago. But what I was going to say too is that if anyone has any questions that are more specific, definitely book a 15-minute call with me. I can probably help answer some of those questions. And if you have something that's a little bit more in depth, or something that's a little bit different that we're going to kind of configure, then what we'll do is we will schedule some time with Gus so that we can have that
Yep.
dialogue to go back and forth to
Yep.
figure out what it is that is needed.
Mhm.
So by all means, definitely book the call with us, and then you never know. You can ask as many things as you like. We don't know if we'll get you everything, but you can ask, right?
Yes,
So
absolutely.
it's worth a try.
Yep.
So I just wanted to wrap up here because I know we're now 5 minutes over. I do apologize to everyone. I wanted to say thank you to Gus for answering all of our questions. I know I always try to put you in the hot seat as much as I possibly can. And then Jake, I want to say thank you so much for all of your advice. I know that we've been sending some clients your way, which has been really, really helpful. People, they need that external person to just kind of say, okay, where am I at? What do I need? Right. And it's helpful to have somebody, walk them through the process. A lot of people, they've only been in real estate. They've never been in this kind of a space. So it's really helpful to have somebody that can help you along that process and give you some solid advice. That's not EQK advice. No offense to us, myself, right? But just some external support. So I just want to say thank you to everyone.
Thank you
And
much.
Thank you very
that's it.
much. Thanks for
We'll see
having
you
me.
guys next week.
Catherine.
Thank you.
Yeah,
Guys.
sounds good. Thanks. Bye-bye.